So we've got this snapshot of the U.S. stock market, and
Nasdaq.
yeah, from March 24th to the 28th, 2025.
Courtesy of Market Deep Dive.
Right, and just at a glance, what really jumps out at me is that investor sentiment really shifted dramatically over the course of just 5 days.
Yeah, it did a complete 180.
And we're going to unpack all that.
Yeah.
We've got reports on the major indexes, what moved the market, how different sectors fared, some of those, individual stock stories that really stand out, and even what happened in the bond and commodity markets.
Right.
So by the end of this deep dive, I want you to really have a clear understanding of not just, what happened this week, but like why it matters.
Absolutely.
So are we ready to just jump in and get to the heart of it all?
Let's do it.
All right, cool. So let's talk big picture first.
Okay.
Overall market performance, the week ended with all the major indexes down in the red. But it wasn't a straight shot down, was it?
No, not at all, actually.
It seems like there was some pretty wild swings along the way.
The week started with a big surge.
Oh, really?
Yeah. On Monday, the Dow Jones Industrial Average was up by 1.42%.
Wow.
The S&P 500 climbed 1.76%.
Okay.
And the Nasdaq actually had the biggest jump.
Mm-hmm.
It was up 2.27%.
So it sounds like the market had a lot of momentum early on.
It definitely seemed like there was some positive energy pushing things forward.
What was driving all that optimism?
Well, according to the report, it looks like there was some renewed hope around the possibility of some tariff relief.
Okay.
There were some signs that some of those reciprocal tariffs that were supposed to go into effect on April 2nd might be eased.
Interesting.
And, that kind of news could really give a boost to industries that rely heavily on international trade. So,
Yeah, that makes sense.
Yeah, the initial positive reaction kind of makes sense.
It does, but that optimism didn't really last, did it?
Unfortunately not. By the end of the week, those gains had completely disappeared.
So let's get into the final numbers then. The Dow ended up at 41,583.90, down about 1% for the week.
Right.
That strong start on Monday was completely erased.
Especially after that drop on Thursday.
Oh, yeah. What was it, like 1.69% or something?
1.69%, yeah.
Oof. And now, year to date, the Dow's showing a 1.3% loss.
Yeah.
I mean, this really just goes to show how sensitive the market is right now, and how it's really reacting strongly to even the smallest changes.
I think that's a great point. I mean, it really highlights that underlying fragility that we're seeing in the market right now.
Yeah, and it kind of makes you wonder, if there's really any strong conviction behind these moves, or if it's all just kind of a
knee-jerk reaction.
Yeah, a little bit. So the S&P 500 basically followed the same pattern, right?
Yeah, pretty much.
Ended at 5,580.94, a 1.5% drop for the week. Even with a good gain on Monday and Tuesday, that big drop on Thursday just...
It was too much to recover from.
Yeah, and this is actually the 5th week out of the last 6 that the S&P has been down.
It is.
And its year-to-date performance is now sitting at negative 3.6%.
Yeah, it's definitely been a tough stretch for the S&P 500.
Yeah, and the Nasdaq took the biggest hit, didn't it?
Yeah, unfortunately, it did down 2.6% for the week, finishing at 17,322.9.
So that's a pretty substantial decline.
It is, and especially considering they had those gains early in the week as well. Yeah, they had that 2% slide midweek, and then Friday really sealed the deal with a 2.7% drop.
Yeah. And year to date, the Nasdaq is down a whopping 7.9%.
It's definitely lagging behind the other indexes.
So what's interesting to me is how that initial excitement about the tariffs kind of fizzled out so quickly.
Yeah.
I mean, it seems like those deeper concerns just kind of took over.
I think it really just highlights, how much is going on in the market right now.
Yeah, so many different factors.
All these different forces.
So let's dig into those a bit more. What were the main drivers behind these pretty wild market swings?
Yeah.
The report kind of points to a few key things. And it all starts with that tariff policy uncertainty we just talked about.
Right. Yeah. That initial optimism about the tariffs, it was really short-lived.
Yeah.
And the report really emphasizes how those fears of a bigger trade war just came rushing back.
Okay.
There was that threat of a new 25% tariff on car imports.
Right.
And then on top of that, you've got the potential for retaliation from Canada and the European Union.
Yeah.
I mean, all that just injected a ton of uncertainty into the market.
Yeah. And Thursday's drop, that sharp decline, that's directly tied to those renewed trade concerns.
Yeah, it seems like every time there's any news about tariffs,
Hmm.
the market just reacts so strongly.
And I think that makes sense, right? Because the possibility of these trade barriers,
Hmm.
it can really hit corporate profits
Right.
and then ultimately affect what consumers pay for things.
Right.
So, yeah, I mean, even just the uncertainty alone is enough to make investors nervous.
Absolutely.
And what else was going on? I know the report mentioned those ongoing inflation fears.
Yeah, that's another big one.
Right. Yeah.
There was some hope that inflation might be easing up a bit,
Yeah.
but then new data came out during the week that suggested it's still really high.
Oh, no.
Yeah, and that really dampened expectations for the Fed to start lowering interest rates anytime soon.
Right.
And on top of that, everyone was watching for the release of the Personal Consumption Expenditures Index.
The PCE,
Yeah.
right? That's the Fed's favorite way to measure inflation, isn't it?
It's the one they really pay attention to.
So what were people expecting to see in that data?
Well, the report said that most people were expecting to see an annual inflation rate of 2.5% for February,
Yeah.
which is still higher than the Fed's target of 2%.
Yeah.
And, that expectation actually contributed to that sell-off late in the week
Oh, I see.
because it kind of reinforced the idea that interest rates are going to stay high for a while.
So higher rates for longer and the possibility of these trade wars.
Uh-huh.
It's like a recipe for disaster, right?
Yeah, it's definitely not the most supportive environment for the market.
No. And on top of all that, it doesn't sound like consumer sentiment was doing much to help either.
No, not really.
The report talks about how consumer confidence is waning.
Yeah, and this is a big deal.
Right.
The Conference Board's Consumer Confidence Index dropped in March.
Okay.
It went all the way down to 92.9,
Mm-hmm.
which is the lowest it's been since January 2021.
Wakes.
And what's even more concerning is that the Expectations Index, which is part of that broader measure, that fell to a 12-year low,
A 12-year low.
65.2.
Wow. That's a really clear sign that people are feeling pretty negative about the future.
It really does paint a bleak picture.
Yeah. So what does this mean? What are the implications of consumer confidence being this low?
Well, it basically means that people are feeling less confident about the economy and their own personal finances.
Okay.
And when people feel that way, they tend to cut back on spending.
Makes sense.
And that
Yeah.
can have a ripple effect throughout the economy because consumer spending is such a huge driver of growth.
Right.
So the report actually links this drop in consumer confidence directly to that downturn on Friday
Uh-huh.
because investors are likely factoring in the possibility of lower demand and smaller profits for companies.
Yeah, it all ties together, doesn't it?
Yeah, it's all connected.
And we also saw some kind of mixed signals from the economy during the week, didn't we?
Yeah, we did.
The report mentioned that there was an initial boost from stronger than expected GDP growth in Q4,
Right.
but that momentum didn't really last.
It fizzled out.
Yeah.
That positive GDP data gave things a little push, but it was quickly overshadowed by all the other negative stuff we've been talking about.
Right.
The trade concerns, the drop in consumer confidence.
It's like one step forward, two steps back.
Exactly.
Okay, so we had a week where tariff worries, inflation fears, and declining consumer confidence really took center stage.
Yeah, they were the main themes.
And that explains why the market shifted from those initial gains to a broader sell-off.
Yeah.
So now let's look at how different sectors performed.
Okay.
The report mentions that there was a move towards more defensive stocks.
Right.
Utilities and consumer staples actually outperformed the rest of the market.
They did, and I think that's really interesting because it suggests that investors might be starting to expect lower growth and are looking for more stable returns.
Okay, yeah. So it's not just about seeking safety.
Right.
It's a potential shift in how they're viewing the whole market.
Absolutely.
So those safer bets saw minimal declines, but the more cyclical sectors,
Uh-huh.
the ones that are more tied to the economy's ups and downs.
Yeah, those were hit pretty hard.
Let's start with technology.
Okay.
What happened there?
Technology saw a significant drop,
Okay.
about 3%.
Wow. And why is that?
Well, it's likely due to those renewed fears about tariffs.
Right.
Because a lot of tech companies rely on complex global supply chains,
Uh-huh.
which could be disrupted if trade tensions escalate.
Yeah. And the report specifically points out that the Nasdaq's overall decline was driven by losses in semiconductors and software companies.
Right.
Those are the ones that are really vulnerable to any kind of trade disruptions.
Absolutely, because they have these intricate global networks that they depend on.
Right. Okay, so what about consumer discretionary?
Yeah.
That sector, that's usually a good indicator of how much people are spending.
It is, and that sector also saw a decline,
Okay.
about 2.5%.
Okay. And what drove that?
Well, the report highlights the automakers as being particularly affected
Right.
because of the potential for those tariffs on car imports.
Right.
And with a weaker outlook for consumer spending overall,
Yeah.
the whole sector is facing some headwinds.
So it sounds like people might be holding back on those big purchases.
Yeah, it seems like it.
But the report did mention that discount retailers were doing relatively well.
Yeah, they were.
So maybe consumers are becoming more value conscious?
Yeah, maybe they're still spending, but they're looking for deals.
Okay, that's an interesting point.
Yeah.
So what about industrials? How would that sector do?
Industrials were also down about 2%.
Okay.
And again, this is connected to those fears of trade disruptions
Right.
and the uncertainty surrounding demand in the manufacturing sector.
Yeah.
The report specifically mentioned that transportation stocks were down, which can sometimes be a sign of broader economic weakness.
Makes sense. And what about financials?
Okay.
That sector's been interesting to watch with all the talk about interest rates.
Yeah, it has. And financials were actually down by 1.8%.
Okay.
Now, they did start the week with some gains,
Oh.
probably because of the expectation that interest rates would stay higher, which can be good for lending margins.
Yeah.
But as those concerns about a potential slowdown intensified, those gains disappeared.
Oh, I see.
Yeah.
So basically, we're seeing a consistent pattern here.
Yeah.
The sectors that are most exposed to trade risks and a slowing economy, they're the ones that took the biggest hits.
Right. While those more defensive areas
Yeah.
provided some stability.
Right. Okay. So let's shift gears a bit and talk about some specific stock movements.
Okay.
The report highlights a few interesting stories.
Yeah,
Starting with Tesla, sounds like that was a wild ride.
it was. They had a huge jump on Monday.
How big are we talking?
12%.
12% in one day.
Yeah.
Wow. What happened there?
Well, it seems like it was fueled by those early hopes for tariff flexibility,
Okay.
which would be a big deal for the international sales.
Right.
And then there was also some speculation about a possible partnership with Mobileye.
Interesting.
Yeah. But as the week went on and those trade concerns resurfaced,
Right.
Tesla gave back most of those gains.
So they ended the week basically flat.
Pretty much.
It just goes to show how sensitive some of these companies are to policy changes and,
Yeah.
just the overall market mood.
Absolutely.
Okay, so what about NVIDIA? They've been a real leader in the AI space.
They have. And they actually saw a decline of over 4% for the week.
Oh, wow.
Yeah. And the report mentions that they had some significant losses on Friday,
Right.
which is in line with that broader weakness in the tech sector.
Yeah.
But they were also under pressure midweek with those tariff fears.
Okay.
And it's also possible that after their huge run-up in recent months, some investors just decided to take some profits.
Okay, so it's kind of like a combination of factors.
Yeah, a perfect storm.
Yeah, and General Motors also had a pretty big drop.
They did. They were down by 6.7%.
Oh.
Yeah. And that's almost entirely because of that threat of a 25% tariff on car imports.
Yeah, I mean, if that were to happen, it would really increase their costs
You would.
and squeeze their profit.
All right, so investors are understandably concerned.
Yeah, okay, and lastly, the report mentions the IPO of a cloud computing company called CoreWeave.
Right.
How did that go?
Well, they went public on Friday, March 28th on the Nasdaq,
Okay.
and their IPO price was $40 a share,
Okay.
which is actually below their expected range.
Oh, interesting.
Yeah, and they ended up with a valuation of $23 billion.
Okay.
So the report interprets this as a sign of investor hesitation because of all the turmoil in the market.
Right, so even a highly anticipated IPO like that,
Yeah,
it couldn't escape the negative sentiment.
it couldn't.
Okay, so let's move on to the bond and commodity markets.
Okay.
What was happening there?
In the bond market, we saw a move towards safety.
Okay.
U.S. Treasury yield actually declined a bit.
Okay.
The 10-year yield fell from around 4.3% to 4.20% by the end of the week.
Okay, so that's a classic flight to safety move, isn't it?
Yeah. It is when the stock market sells off, investors tend to put their money into less risky assets, like government bonds.
Right, so even with all the worries about inflation, it seems like the fear of a slowdown was more powerful in the bond market this week.
Yeah, I think that's a fair assessment.
Okay, so what about commodities? Was there anything interesting going on there?
Yeah, we actually saw some divergence in the commodity markets.
Okay, how so?
Well, gold, the traditional safe haven asset,
Uh-huh.
that saw a significant rise.
How much?
It went up by 2.5% and hit a record high of $3,100 an ounce.
Wow. Okay. So clearly people were looking for a safe place to put their money.
They were.
And with all the uncertainty in the markets,
Yeah,
gold is looking pretty attractive.
absolutely.
Okay. So what about oil prices? What happened there?
Well, West Texas Intermediate crude oil actually dipped a little bit.
Okay.
It was down 0.22%, closing at $68.40 a barrel.
Okay. So a small decline.
Yeah.
And why is that?
Well, it seems like there's some concerns about demand weakening
Okay.
because of those potential trade disruptions and the possibility of a broader economic slowdown.
So even though oil prices were relatively stable earlier in the week,
Right.
those fears about the economy eventually dragged them down.
Yeah, it seems like that.
Okay, so basically we're seeing a risk-off sentiment in the commodity markets. Investors are going for the safety of gold, while worries about economic growth are weighing on oil.
Exactly.
Okay, so let's zoom out a little bit and talk about the global context.
Okay.
How did this downturn in the U.S. market affect other markets around the world?
Well, it had a pretty big impact, actually.
Okay.
European stocks were down 1.29% for the week.
Okay.
They had actually shown some resilience early on compared to the U.S.
Oh, interesting.
But then those renewed trade fears and the potential for retaliatory tariffs on American goods
Right.
that pulled them down.
Makes sense. And what about Asia?
In Asia, Japan's Nikkei index fell by 1.5%,
Okay.
and Hong Kong's Hang Seng index was down 0.8%.
Okay.
So those declines basically mirrored the losses in the U.S.
Right.
And they also reflect the ongoing concerns about trade relations between the U.S. and China.
Right. And what about emerging markets?
Emerging markets experienced some capital outflows.
Meaning investors were pulling their money out.
Exactly.
Okay.
And currencies like the Mexican peso, which is sensitive to U.S. trade policy,
Right.
that weakened.
And did that affect their stock markets?
It did. That currency depreciation contributed to further declines in their equity markets.
So this just underscores how interconnected global markets really are.
Yeah.
And how much U.S. policies can influence things all over the world.
Absolutely, it's all connected.
Right. Okay, so finally, let's look ahead to the coming week, the beginning of April 2025.
Okay.
What are the key things that investors should be watching?
Well, there are several.
Okay.
First and foremost, we need to keep an eye on those tariff developments. April 2nd is the deadline for those reciprocal tariffs to go into effect.
Right.
So any news about whether they'll actually be implemented or delayed or maybe even softened, that's going to be a major driver for the market.
Okay.
Investors will be watching very closely to see how specific sectors might be affected.
Right, because it's still a major source of uncertainty.
It is a big one.
And what about economic data? What's on the calendar for next week?
Well, we're going to get the full February PCE inflation report,
Right.
which, as we discussed, everyone was already anticipating this past week.
Yeah.
And we'll also get new jobs data and the manufacturing PMI.
Okay.
Now, if that data is strong, it could ease some of those fears about a slowdown.
Right. But if it's weak...
Then it might actually make the market's recent losses worse.
Okay, so we've got tariffs, economic data, and earnings season is right around the corner, isn't it?
It is.
So we'll probably start getting some early insights into how companies are doing.
Right. We'll see some initial Q1 earnings previews.
Yeah.
And the performance of those recent IPOs like CoreWeave, that'll be closely watched to see how investors are feeling about things.
And of course, we can't forget about the Fed.
Right.
After that PCE data comes out. Any signals or comments from the Fed about interest rates?
Yeah.
Those are going to be scrutinized by the market.
Absolutely.
Yeah.
Any hints about the timing or size of potential rate cuts, those will be really important.
So it sounds like the volatility we saw this past week could very well continue into April.
It's definitely a possibility.
And a lot will depend on those tariffs, economic data earnings, and what the Fed has to say.
Right. There are a lot of moving parts right now.
So the U.S. stock market is in a pretty complex situation right now, isn't it?
Yeah, it is.
It's trying to balance those risks from trade policy with the underlying strength of the economy. And I think that's going to keep investors on edge for a while.
Yeah, I agree.
So there you have it, a breakdown of the U.S. stock market's wild ride from March 24th to the 28th, 2025. I mean, it's amazing how quickly sentiment can change.
Yeah.
And how sensitive the market is to policy news and economic data.
Absolutely.
So what stands out to you as the most important takeaway from this week?
That's a good question. I think for me, it's how quickly that initial optimism can be replaced by deeper anxieties.
Yeah.
Like it's a reminder that Things can change really fast in the market,
Absolutely.
and we need to be prepared for anything.
Yeah, and maybe the vulnerability of certain sectors to those global trade dynamics,
Uh-huh.
it's a good reminder that the world is increasingly interconnected
Right.
and that what happens in one part of the world
Yeah,
can have a ripple effect everywhere else.
it definitely can.
So as you go about your day, think about this, with the market being so sensitive to all these global forces,
Yeah,
how can individual investors try to navigate all this uncertainty?
that's a great question to ponder.
It is. I think that's something we all need to be thinking about.
I agree.
Food for thought.
Yeah.
Thanks for joining us.
It was all my pleasure.
And we'll see you next time.